Okay, so it's been a while since I last did a quick video on really anything. Let me just take a sip of the coffee here. But I think it's time to talk about a few more topics that I see a lot of traders struggle with, and honestly, to some degree, even I had a lack of clarity on for a long time within trading. It's not like the way people do this is always wrong, but it's something that I've seen. I think that there's a lack of clarity on this for beginning traders, and they kind of just take guesses. And that thing is trading ranges. What do ranges look like? How do they form? How quickly do they form is another question I think that is extremely important. And that kind of comes down to market structure, which is a video I'll do next, but it should have been the other way around, to be fair. But okay. Market structure can essentially just quickly be defined as whether, let me just turn the volume off here. What way we're going, essentially, right? So this is a trending market, right? We can see here, we're going up, right? Higher highs, higher lows, higher highs, higher lows, higher highs. Trending market to the upside. Then, on the contrary, this, what is that? Lower lows, lower highs, lower lows, lower highs. A trending market to the downside. Okay. Now, if we drag this over, this is what a market usually looks like, right? And in between this, we have one of these. This is a range. This is a trending market. Template will go green. And this is another trending market. And that is essentially what it looks like, right? Market structure is trending, ranging, trending. Essentially how it can be defined. And this, of course, blah, blah, blah. Now you get the gist of it. So how do we define ranges? When do we spot ranges? And when are these ranges kind of like, how can you quote unquote predict what a range will do? Now, we don't really predict, but react at the right moment, so to speak, and kind of have a plan for ranges and kind of analyze what the tendency of a range, what it tends to do, so to speak. So, excuse me. The first thing I think that we should look at when it comes to range, and we're going to use the recent Bitcoin price action here to show you just how common this is. So is kind of like what a range does. And after you can quote unquote say this is a trending market here, right? We can even have a major range here that I'll talk about in a second, but we're just going to go in this little section, kind of like as if I could be on the 4-hourly and do the same thing. Right, we can see this is a downtrend here. This whole thing all the way since June is kind of a downtrend. We kind of put in a new high here, but let's say since July, we've just been trending down, 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 and now we're kind of in a range. So how exactly will we define this range if we look at it? Now, I like just doing it on the daily, so that's what we're going to do here. Essentially, what you want to look at is the primary first kind of reaction moves. So this is the drop. Out of this drop, we get a move up to here. But this move isn't quite finished yet, since we get a new low before we properly do a rally, right? So this is kind of still one move. This whole thing, I would consider one move. So we take this low, right? And you just draw a line. Whoops, we just draw a line at the low, right? Then we draw a line. You pick the high swing point after that low swing point, and you draw a line. Then you have your range defined. That's literally how easy it is. So the initial low and the initial high set will be your range. Now, something to take note of within ranges is they're not going to be perfect, right? So as a beginning trader, most people would define their range as something like this, and something like, oops, we'll just make sure this is straight, and something like this, and that's fine too. To be honest, I'd rather define it as the initial low of the set by the range essentially, and then the initial high. Now, why is that? Because these points are crucial points in order to trade or to trade when we get a deviation. And this is a super common thing if you really look at it, of deviation happening at the initial points, right? The initial swing low and high. In your other range, this wouldn't be as clear. It would just be like a weird, annoying kind of deviation. But let me kind of say one more thing. Ranges aren't going to be perfect, right? So when you draw a range, it doesn't have to stay just within this boundary, or but this high didn't tap, right? Or yeah, but this is not in the range, so I'm going to move my range here because this seems like support. It's still kind of holding, deviation, touch, and then this is the other range. No, right? So now that's of course a little bit of a ridiculous example, but you get the point of like it's gonna be a game you're playing, so to speak, with the chart. It's not gonna be cut and dry. This is the range, and it's not gonna get out of this unless it's a breakout. So let me just move on here to deviations. What you usually see is you get like I said, initial swing low, initial swing high. You put in the range, and next thing you know, you're gonna get deviations. Right? This almost always happens, right? So you're always going to see, almost always, 99% of the time, or like 90% of the time, you're going to see I want to say 80, but it's fine. 90% of the time, you get the point. You're going to see deviations, this and this, from these initial swing points. Now, I'm not telling you that every time we get out of a range like this, that this is going to be a deviation, because it could easily be that we saw this. Right? But the moment you see a close reclaim of this level is when you can probably say, hey, it's a confirmed deviation. Let me get in long, easy short, or easy stop loss right under that, and see if I can swing this up to the high for the deviation of the upside. Let me just make sure that these remain. Those are kind of useful. Whoops. So that's on deviations. Excuse me. So the next thing I kind of want to talk about is the fact that you want to add a middle of the range, right? So you can do this by just selecting your fib. So that's the EQ, is what they call it. Like not the fib, but that's what they call the middle. You're going to want to add a middle of the range. We'll just do a trend line. Usually I draw ranges with this tool, and you kind of just draw it out. You have it like that, but I have it like this now. We'll just color this one orange line, and then go lower opacity. There you go. So why exactly would you want to add a range? Well, it kind of serves as a deliverer of increased clarity within the chart. So it won't always be perfect. Sometimes you'll see somebody say that the EQ isn't straight on the fib, but it's right here, right? I've seen people draw it that it's like here, right? Not on this exact chart, but like as in percentage wise, right? So then you have like 65% here, 35. I usually just pick the midpoint because honestly, charts are often in line with what's happening enough to say they're going to be right on 50%, right? You can see here a prime example of it, with it essentially coming down to this point, rallying to that 50%, even here, tapping it again. First, also creating this, you have to check out my liquidity video where I talk about equal highs, equal lows, and where to spot liquidity. Essentially, you can see right here, a beautiful equal high formed, and on the lower time frame, I'm sure this is going to look beautiful for a liquidity grab, which this essentially was, but that is off topic. Just watch that video. It will be one of the videos on my channel. I'm sure you'll see it. How to spot liquidity is what it's called. And yeah, here you see the same thing essentially. Just as a side note, we see the same thing here, right? And equal low. So that has also been taken later on. So that also proves that, or not proves, but it goes to show that equal highs, equal lows, these type of concepts are not as obscure and unnecessary as you think, and often they do kind of come in line with what price action wants to do. So a thing to note about the EQ, so we can keep going with that. So with the midpoint of the range, is that you'll often see that if the price rejects off the midpoint, as we can see here, it'll stay in the bottom half. As you can see here, tries to rally under, retests it, stays in the bottom half, right? Comes in, retests the EQ for a, so we can go down to the 4 hour if you like, just to make it more clear, right? You can see here what's going on. We come in, retest the midpoint of the range. Now the midpoint hasn't technically been set yet, but this just confirms more that the midpoint does exist on this chart. We stay in, we break through it, we come here. You can even see a small little tap here before we break through. Come in, deviate the bottom side of the range, come in, retest it, fill, slowly creep up, boom, break out over it, can't hold it, fills the hold under, comes back into the bottom of the range, doesn't retest the bottom of the range, but sometimes you do, sometimes you don't, sometimes it's imperfect. Again, ranges aren't always perfect. Come in, retest it here for a reclaim of the middle of the range after we got rejected once, rejected twice, breakout, reclaim, test at the top of the range, deviation, test at the top of the range, test at the top of the range, test at the top of the range, and a breakdown from the top of the range back to the EQ, right? Now we're at the middle. Let's see if we can hold it and get a retest at the top of the range here, and then maybe a breakout or a breakdown back to the bottom of the range, and then possibly back up, right? And that's how you play a range, right? It sounds boring, but then possibly back up here into this EQ, and who knows, back here, or rejection, and ultimately one side's going to break. So what is the benefit of knowing this EQ thing, and how can you kind of gauge strength with it if you're constantly sitting here like I just was, like saying, hey, this is a possibility, this is a possibility, this is a possibility. What's the point of even having it then, right? Can't you just say, fuck the midpoint? If it comes here, out of it, I'm going to take a long right here with a stop loss under this, under the top of the range, and try to rally it. Sure, you could, right? The reason you want the midpoint is because the story it tells is essentially how much strength do we have? What does price action really want to do? You see, this story that's telling me so far is that whenever it's in the bottom of the range, which is the majority of the time, price is doing a good job of kind of keeping itself within the bottom of the range. In fact, we have a strong deviation here where we tried to get in, we tried to hold it and just broke below it. Even here, we tried to like retest it, get in, and we fail. We try to retest it again, we fail, and then we break in, go to the top of the range, instantly set a deviation that sold off pretty hard, back to the top with a big wick here. So the story is telling me is that whenever we're in the top of the range, we spend much less time there, and the same story goes here, as I said here and here. The fact is, we come in to the top of the range, we try to hold it, but we just get sold off into the bottom of the range every time, right? So the story here essentially being the bottom side of this range has a lot more strength than the top side does, right? So the bulls, essentially, you could say, have a lot less strength than the bears do, right? Or you could even say the bulls are less confident in the top of the range than they are in the bottom, because obviously the fact is we are getting bought up here, right? So bears are very confident in the top, not particularly unconfident here, and bulls are very unconfident here and relatively confident here. So essentially, by that analysis, you can sway the pendulum in the direction of the bears having a stronger case to be made just within this range, right? They're doing a good job of dominating this range so far. Okay, so what else should you know about the range? A nice thing to know is these are miniature deviations, or sweeps, many people call them. So it's not quite a deviation. This is often called a sweep. I keep calling them deviations because to me it really doesn't matter whether the price action spends a lot of time there, and I'll define deviation here in a second. Sweeps are essentially, they're very short, right? So you can see that this is the initial low, and all the sweep does, even on the 1 hour, right, is it spends 13 hours under this point. And you can see here, if we pick this one to this one, it spends 12 hours above this swing point. And the point there being, it is a relatively short sweep, right? It isn't, price action isn't quite spending a lot of time here. And that's why it's called a sweep. Meanwhile, a deviation would be something along the lines of, you set the high, and I'll just draw it out separately so it's less confusing. We'll set that as the midpoint, and this as the top, and this as the bottom. And you can imagine price comes in to this range, and it sets that low, and it sets that high, and it comes back where we'll draw like this, and it comes back into the low, and it sweeps that little low very tinily, comes back in here, fills this, comes back here, breaks down, and it does something like this, reclaims it, comes back in, sweeps this high, comes back into the range, and does something like this and breaks out, right? So this is quite a complex range, but we can see here that sweep I was talking about, right? Just like in Bitcoin, we had that sweep. It comes out of the market, the trending market structure, comes down in, sets a low, sets a high. We mark those as our highs and lows of the range. Now, again, you can see the EQ here. I drew it essentially as how you would see it in the market. None of it is perfect, right? The midpoint is never perfect, but this could be a retest, filled reclaim or filled claim, retest, deviation above the middle. And then here we see a retest, breakdown under, deviation, reclaim, breakdown, and ultimately maybe a trend up. Right now, yes, this is of course an imaginary situation, so you could discredit me for trading it, but this is where deviation comes in, right here. Right, so we're gonna mark two sweeps with crosses. Sweep 1, sweeping this low. Sweep 2, sweeping this high. Right, sweeping this low, sweeping this high. This, on the other hand, isn't quite a sweep. It's called a deviation. Right, and we're going to mark it with this little red box. And the difference between a deviation is the fact that it's not just here to grab this liquidity. It's really here to kind of trap as many traders as possible in this shorting these highs or retests, if you will, in attempt to ultimately trap as many people as possible with stop losses right above here before reclaiming that range and accumulating as much as possible before we get out. And something that is funny is we're just going to drag this over here, and I will show you guys the following. There we go. And that was not the goal. We're just gonna paste that right in here and take a look at it. So many of us will know this, Wyckoff accumulation, and this is just another way we can see ranges, right? You can see that right here, the initial low set, initial high set, initial low set. Yeah, well, we can see everything. I'm just going to draw this down a little bit, or drag it down rather, right? We're just going to delete this. Oh, fuck. We're just going to delete this, delete this, delete this, and delete that. And this is a very unscripted video, so excuse my slowness, so to speak. Here you can see the low set and then the high set. These drawings are completely out of whack right now. Delete that, delete that. And then a sweep and a sweep of that high. Now you could also say, hey, this is the initial high set, that's the initial low set. That's not what I'm saying. I'm saying this initial high, and then a sweep, and you're back into that range, and it's not perfect. And you could draw essentially a middle point right here, and you can see the dominance of that middle point kind of all throughout the chart. So Wyckoff accumulation is just another way to play ranges, or to define ranges and define different points in the range, but essentially it's coming down to the same thing. And this deviation is essentially to trap as many traders as possible before reclaiming. So I'm not saying that when this happens in a range or in this market structure where you're coming from the top and you're having a trending market structure that's down, this high does not break this high, so we're still intact. We technically formed a lower low, lower high, lower low, that you can't be waiting for some type of like short to get in here. That is fine, but the moment it reclaims, you cut it, because then it's likely to be a deviation of this range. And then you're better off picking a long here, entering it with a stop loss under that deviation and seeing if that range plays out to the top, see if the deviation plays out, re-enter short here, or once the deviation plays out on lower time frames, enter that short and play this range back to the bottom, right? Taking profits along the EQ, etc. Whatever your strategy is. But that's essentially what it comes down to ranges. So I think that the main things to define is really just like when you look at a range, initial swing high, initial swing low, that's the low and the high of your range. Mark those. Grab your fib tool, 50%. That's going to be your equal, or like your EQ, your mid. And then you're going to look out for deviations or sweeps of these initial highs and initial lows, just like we have right here. And those you can play by entering short. For example, right here, when the range retests the high of the range. And when you play a range, it's just simple. You wait, right? I wouldn't ever really trade the EQ, right? So don't trade it. Don't be like, oh, it's at the EQ, I'm going to long the midpoint with a stop loss here to try to get back at the top. I think that's overplaying the range. I think the way you want to play it is really just a matter of trade the lows, trade the highs. And the EQ is simply there, as I stated before, to define where is the strength. And now we're seeing so much more time being spent at the bottom of it with very little time here. Straight deviation. I went over this, straight deviation here. And this is some more time spent, but quite a bit of rejection and not a lot of strength here. You get the point. That's, I think, the main things to look out for range. And then ultimately look out for any deviations of longer term price action, spending more time up here and then coming down. That's about it. So you're obviously interested in trading. Why don't you check out boomers.org, where we have over 100 educational articles, a weekly newsletter all about trading and macroeconomics, informing you about what the next thing is that's going to happen in the market, what the outlook is, and what you should be looking out for within your trading. Furthermore, we do have a bunch of educational content here on YouTube that you can check out. We do have exclusive articles, like I just stated, a free Telegram access, which I think is the most valuable thing you can get right now. Finally, we're building out the course, a full course on the trading technique that we use here at Boomish Capital. And then furthermore, we do have me on Twitter. So if you want free alpha, I think Twitter is the best place to get it. Telegram is when you actually want great trade alerts and you're looking out for kind of what some other traders are doing and what I'm doing in my trading. When I put trades, what trades I'm looking at, what pairs I'm looking at, Forex, whatever, that's all in there. And I do share quite a few of those on Twitter as well. But to be fair, if you want pre-entry, prime entry alerts, Telegram is where it's at, because mostly on Twitter, I'll be a bit late or very early before I even enter. I'll just post like, hey, this is an interesting pair. But when I actually enter is all on Telegram. So that's that. And yeah, again, the full strategy course is coming out soon, and all these educational articles are up for grabs. So go and take a look at that if you're interested in trading, and especially if you're just beginning.